what are the other big themes? I mean, one thing we hear from pretty much everyone we speak with is corporate banks and how this is the year for them.
Yeah.
Almost consensus view, and we're only in January.
No.
Your thoughts?
Yeah. Yeah, no, I mean, so we are no different there. So I think, as a broader theme, we are looking at, some turnaround stories there. So corporate banks and healthcare are the two names, which we have picked in that space. So I think the corporate banks, given that we are coming out of an asset crisis issue, so that's something which I think is largely behind us. We think the profitability can actually, surprise on the upside there. So that's where, in that context, when we look at the valuations of corporate banks, they look quite reasonable. And obviously, there are other factors which aid them because of the space which we think could get vacated by the non-bank institutions. So I think we think that the valuations and the risk reward still looks quite favorable in the corporate bank. So yeah, I mean, it's a consensus view, and we also kind of have that view on corporate banks.
Craig, the view is now that a lot of the headwinds that we were facing, say from the NBFC side in terms of a liquidity crunch as well as oil prices, are now behind us. Do you think that maybe we're looking at a better growth picture for India probably in the coming quarters?
Yeah, it looks like that's going to be the case. I think right now the Nomura economics view is that the first half is going to be the toughest. But afterwards, I think the second half is definitely going to be an improvement. I can see it also coming through in terms of the environment that we talked about, just global oil prices remaining low, fiscal stimulus coming through from numerous countries in Asia, and some of the big ones including China as well. So the whole overall growth environment globally, I think, can see a bit of improvement coming through in the second half. But for India, the underinvestment that we've seen, or even disinvestment last year, I think there can be a return of that. So then we can see, the local markets actually performing very well in that kind of environment in the second half of next year. Sorry, second half of this year.
So, I mean, again, another view which is developing quickly is we'll get a rate cut in Feb. We'll get a change of stance from the RBI. Beg your pardon, did I say Fed? But RBI. And maybe we get another rate cut from the RBI a little later in the year. Is that the view at Nomura as well, Craig?
Yeah. Well, it's certainly the view of the market. If we're looking at, for example, rate expectations, there is at least one that's priced in terms of cut for this year over the next 6 months. In terms of Nomura's view, we actually have the view of no cut for now. But I would highlight that the risk to this view is certainly that we could see a cut come through. Inflation is very low, and I think the overall kind of financial market dynamics should improve drastically after the elections. So I think the one sticky point will be about the elections and the potential volatility, which could keep actually RBI constrained for the time being. But of course, observations around inflation as well, I think that would be another factor which could keep RBI on hold. But going to the latter view, I think the risk is that we could see some cuts coming through.
Sayan, inflation being what it is, right? Especially in rural India, does that also indicate some sort of demand problem in some sense? We got some numbers from auto, and people have been starting to talk about that. What are your thoughts?
So at the margin, I mean, I think there has been some slowdown. The fact is, as I was mentioning to you, when you look at some of these consumer companies, staple companies, I think the kind of growth in rural India, which was very strong, as I mentioned, in 2018, there seems to be some concern around that. But still, it is better than what's there in the in urban consumption. So this growth we have seen despite the kind of stress in the farm sector that we have seen. So I think the entire fiscal push by the government, right, there is a pickup in pace of infrastructure build out, and that's what I think is driving the rural economy. At the margin, I do agree that there seems to be some slowdown, no doubt about it, but still, it seems to be quite okay at this point.
Sayan, a couple of stocks have been plagued with news which has really driven them down, which has not got to do with earnings. So, for example, a Sun Pharmaceuticals or a Z Entertainment, some reports which are unverified, but the larger picture is that maybe corporate governance could be a headwind for a couple of these stocks. What would your approach be?
See, corporate governance is obviously something, which is quite critical. I mean, it kind of, investors, this is the first screen that one needs to pass, right, before one really looks at the company, analyzes the financials, and talk about valuations. I think, one has to be, very clear as to what we are dealing with here. Sometimes there's a lot of noise around this, unverified, as you mentioned, and one needs to really cut through all of this and see what exactly are the issues there. But one thing is for sure, I think, in our interactions with investors, and it's not very recent, but even, earlier, I mean, for some time now, we are seeing, the investors are questioning corporate governance, and they are really talking about it. So it's back on the table. There's a lot of discussion happening around that. So I feel going forward, you would see, the kind of wealth destruction that we have seen in some of these companies. I think there would be a lot of discussion around governance issues going forward. Frankly, I think. The companies which have good governance standards, and they have demonstrated it over years, would definitely command a premium. Probably that would go up somewhat, with the instances that you mentioned we have faced in the recent past.
But Sayan, in a lot of these cases, what is coming out now has been, in a way, informally known, in the market for a while. I mean, so and people have been happy putting their money in and staying in these companies for long periods of time, right? I mean, some of these names. But
yes.
then suddenly something comes out and everybody wants out of the door.
Yeah.
So,
yes.
How does one look at that?
Yeah, I mean, so this is a typical market reaction, right? I mean, when you have, more people getting concerned, all of a sudden you have very steep fall in prices, right? There's not a gradual fall. But I agree with you. So what it tells you, and the learning basically here is that, the investors need to talk about it, need to think about it while making, investment decision. And analysts also have to take cognizance of these things while valuing these companies, which in many times when things, are going well, people tend to ignore. And, one fine day, for any reason, it just becomes an issue, as you mentioned. So I think the learning is, this is something which just one can't wish away, when nobody's talking about it. So, so I do expect, going forward, we have some incidences, as you mentioned, which happened with frequent, at high frequency now. I think we will see more discussion around governance issues, going forward, and people taking a view and adequately giving a premium or discount.
Okay. All right, Sayan as well as Craig, it's been a pleasure. Thank you very much for joining in and sharing your thoughts on the fundamentals of the market.
It's a wrap from both Ekta and me here on this edition of Taking Stock. Thanks very much for watching.